CBT News, celebrating 10 years of delivering the news and content automotive professionals count on. CBT News, 10 years strong. Subscribe today. Welcome to CBT News with Bridget Fitzpatrick.
Good morning, everyone. Welcome back to CBT News. I'm Bridget Fitzpatrick. Thank you so much for joining us today. Here's Chris Riggins with today's top stories.
Thanks, Bridget. Starting our coverage, CEO Elon Musk has confirmed he will step down from his role at Twitter after Tesla stocks fell nearly 8% in one day. Although the entrepreneur will search for a replacement, he will remain the sole owner of the social media platform and will continue to work in a reduced capacity. Tesla investors have grown increasingly frustrated with the CEO's erratic behavior, which they believe contributed to a 30% share value drop over the course of 2022. Next, GM subsidiary Buick has revealed expensive requirements for dealers looking to sell its electric vehicles. Auto retailers will need to invest a minimum of $300,000 while the automaker phases out gas-powered cars. A spokesperson for the company said the money would go towards converting dealership operations to accommodate EVs. Similar to Ford's controversial rule set announced earlier this year, locations which refuse to pay up will lose their license to sell Buick vehicles. Another investigation by the National Highway Traffic Safety Administration was announced this week over allegations that rental car company Hertz is ignoring regulations. In its announcement, the administration claimed to have evidence the company failed to fix recalled vehicles before loaning them to customers. Hertz has agreed to cooperate with the NHTSA as it reviews records dating back to 2018. This is the agency's third new investigation this month, arriving at the end of one of the busiest years to date. Finishing up our coverage, as part of his administration's climate policy reform, President Biden has revealed new emissions rules. These regulations will tighten standards on heavy-duty trucks, which account for 30% of traffic air pollution. The update is the first of its kind since 2002 and follows in the wake of a nationwide push to fight climate change. Although the rules won't apply until 2027, truckers will need to start planning on vehicle updates or replacements now in order to be compliant, something which many could struggle with despite financial assistance. Don't go anywhere. Coming up next is NADA's Chief Economist Patrick Monzi. We'll be right back.
Delivering the news dealers count on for 10 years. Subscribe today and join thousands of other automotive professionals. CBT News, 10 years strong.
Retail automotive has adapted well to the changing market conditions of 2022. As we close out of the year, we want to take a look back at the market and the transformations that occurred. We're pleased to welcome Chief Economist for NADA, Patrick Monzi, to give us his perspective and forward-looking recommendations. Take a look.
Year in review. What's your take on the state of the automotive market today, from continued inventory concerns to supply chain disruptions? What's the state of play from your point of view?
Well, the market looks a lot different from the start of the year. If you remember back at the start of the year, we had very, very tight inventories and very, very low interest rates.
Yeah.
Since then, inventories have improved a bit. There's a bit more selection out there, and interest rates have risen dramatically. We're looking at 3.75 to 4% target range on the Fed funds rate. So we've actually seen auto lending rates rise above their pre-pandemic levels within the past few months, and they're only going to go higher.
Yeah. A lot higher, do you think?
I don't think a lot higher. I think we're getting close to the top. I think the Fed is we're going to see a few more interest rate increases. But there's still a little bit more for rates to climb before we start to see a pivot.
Sure. It looks like it's working, though. I mean, from recent from the reports today, it looks like it is having a positive effect on the inflation and bringing that down a little bit just on the rate increases that we've already seen. I guess the Fed is now coming out and saying we might increase it maybe 0.25%, not 75 basis points, right?
Yeah, I think the 75 basis point moves are over, and I think that's a good thing. That you're right. That CPI print we got earlier this week was great.
Yeah.
Let's hope we get another couple months where it looks like inflation is really coming down, and that should send a strong signal to the Fed. But we're still dealing with a very tight labor market, and that could keep wage growth up, and so that could also continue to fan the flames of inflation there.
Sure. Where do you expect new vehicle, or I should say new light vehicle sales to net out for 2022?
Right now, I'm expecting 13.6 million for all of 2022. Now, if we see a big push in fleet at the end of the year, maybe we get an extra 100,000. But we've been stuck at 1.1 million units vehicle sales each month since May, and I don't really expect that that's going to change too dramatically in December. So if we do get a surprise pop, maybe up to 1.2 million, that would get us closer to 13.7, but 13.6 is where I think we're going to end up.
Sure. And 13.6 with great profitability from dealerships, it looks as though they're comfortable with that. Even on the OEM side, I've spoken to some OEM executives that said, we've been chasing that 17 million plus SAR for so long, but we're paying so much in the way of incentives to get there, and the dealers are up in arms about it because it's always a race to the bottom when they're figuring deals. And maybe this, 13.6, 14.6, something like that is a much more workable number where everybody is happy and makes money. And it seems as though consumers today now are also okay coming into the dealership and paying sticker price for a car, knowing that when they do that, it also maintains the value of the vehicle that they just bought, rather than them driving off and they just lost $8,000 or $10,000, right?
Yeah, that's very true. It's certainly going to be another good year, kind of on par with 2021 for our dealers, at least from what we're hearing and some of the data we've seen. And you're right. Sustaining or buying cars at MSRP without massive discounts will help residual values going forward.
Yeah.
We've already seen a bit of a downturn in the wholesale markets. Prices have been falling for several months now, but retail prices have been a little bit more sticky. They have started to come down a little bit, not as much as wholesale, but I think this is going to be good news for those inflation metrics, because those used car prices were one of the big things that drove up inflation earlier in this year, and now we're going to start to see, maybe as we get into 2023, some year-over-year price declines at the retail level, and so that's going to be a good thing for inflation.
All right, be sure to watch this interview in its entirety right here at cbtnews.com. That wraps up our show for today, but we invite you to join us back here again tomorrow morning for all the latest news and trends impacting the retail automotive industry. And be sure to follow us on TikTok, LinkedIn, Facebook, and Twitter. I'm Bridget Fitzpatrick. Thanks for watching, and have a great day.
CBT News, your #1 resource for auto industry news and content. Join the #1 most watched newscast in the automotive industry. CBT News, 10 years strong. Subscribe today.